Ron, one of those people that have fulfilled and checked many of the boxes that you just mentioned is one that you've been closely associated with for the past decade plus at this point, and that's Elon Musk.
15 years.
15 years now. Elon Musk, specifically with regard to investments, as you point out, in Tesla, SpaceX, which is now the biggest holding that you have. You mentioned you invest in XAI as well. The Elon Musk story is an interesting one because he has become one of the people that has been maybe the figurehead of American technological innovation over the course of the last 20 years. What exactly is it about Elon Musk that first drew you to investing in him as a person and then the companies that he manages?
Oh, he's brilliant. That's obvious. And when we first met him in 2010, when he was going public, we thought we'd like to invest with him, but I thought it was unlikely. We thought it was unlikely he was going to be successful, where he's doing a couple of thousand cars a year, and he thought that he could do 20 million cars a year. That didn't seem reasonable, but we continued to, after meeting with him for a couple or 3 hours the first time, we continued to follow him, visit him, talk with him regularly, and the executives who worked in his company. In 2014, when it became obvious that his cars were meeting very strong demand, we invested between 2014 and 16, $400 million. And we made about $8 billion in that so far. And then in 2017, we were following SpaceX all along. In fact, when I was in the 1960s, I worked in the United States Patent Office. I chose to work there instead of going to Vietnam. I had a draft exempt job. Sounded like a better deal to me. So when I was there, my art was chemicals. I was a chemical graduate in college. And so I was the person who in the 1960s gave patents for all the coatings that went on nose cones that wouldn't burn up when they came back to Earth. Anyway, so 2017, I started doing research in the 60s. And in 2017, we began to invest in Tesla, in SpaceX, and we've invested about $1.5 billion so far, and that's now worth about $10 billion. And we think that it's likely they could go public next summer sometime, and the valuation has been reported in the press. It could be a $1.5 trillion valuation. Right now it's $800 billion. A week ago it was $400 billion. So how come? What separates him apart? What separates him apart, I attended a board meeting. They asked me to come to New York to meet with a number of board members about, a few weeks ago. And we were talking about Elon and how young people, they are just dying to work there. And so they have about 120,000 people and maybe 30,000 hires a year. And to get 30,000 people, there are several million people apply for 30,000 jobs a year, several million. And then the chairman of Tesla was telling me that they come there. We were asking about what do they come here for? And he goes into these meetings. He'll take 30 or 40 young people or senior people in any one discipline that they're working on, whether it's software, whether it's hardware, takes them into a room and for a couple hours, and goes around and talks to everyone and asks them questions about what they're doing, and keeps getting deeper and deeper. Initially it's general, and deeper and deeper and deeper. And then at the end of the meeting, the people walk out of that room, especially if they're first-time engineers. They walk out of the room and they're shaking their heads and say, "Can you believe what we've learned? Can you believe what we've just heard? I am so glad I survived that meeting." So basically, the people who work there are saying they come there because they want to work with this person. Now, of course, early on, if you're investing in Tesla, it's a great risk when you're relying upon one person like that. But now when you have 120, 130,000 people and the business is growing exponentially, no longer linearly, then what happens is, as you get larger and larger and larger, the risk of one person diminishes. And what you've invested in is a company with a culture. And the culture is what we try to discover. This first principles is all about. What you're trying to discover is what's been instilled in these people, that he gives responsibility to talented people, and talented people with unleashes them. And if you got a better idea than what I thought was the best idea, show it to me. And if you can prove that it works, even though I just invested 20 or 30 or $50 million in another way to do it, if you show me something better, we'll throw that out and start all over again. And so he's not afraid to fail. And basically that's what he does over and over again. So you're looking for personality traits among these people in whom we're investing that make it likely they're going to be successful, in our opinion.
If I could just follow up, you mentioned that you anticipate, you think your best guess, in your words, is that SpaceX goes public sometime in the summer of next year. You said maybe June earlier on.
I was thinking June 28th because that's his birthday.
Okay, there you go. I like that. I like that there's a target. We can kind of coalesce around that. So in your opinion, that's when it happens. You
Well,
also mentioned,
they've said it to their shareholders.
now, you have a valuation as well. What do you think the valuation will be for SpaceX as it approaches kind of that anticipated target for an IPO date?
Well, it's $800 billion now, and the press has speculated that it's going to be twice that amount next summer. This happens to be, of our investments right now, it's our largest investment. We have about $10 billion invested in that, in SpaceX, about $5 billion invested in Tesla at market. So Tesla right now is selling at 460, 470, 480, something like that. Our cost is $12. And I think we're going to make, in Tesla, I think we're going to make 5 times their money again over the next 10 years, maybe more. And then in SpaceX, I think, I've been wrong so far about how much we're going to make. So my number is here, and Elon's number is here. So we'll see. But I wouldn't bet on me.
You would not bet on you, but I think a lot of people are right now.
Well,
Michael,
I bet on
a lot
him.
of people are right now. Best ideas is something that Ron just mentioned, kind of this idea of challenging what could be and coming up with an alternative. Well, hey, what's the better idea? When it comes to Baron Capital's portfolios, as somebody who's running some of that money right now, where do you think those best ideas are gravitating towards these days? It seems everything is about AI and technology. But when you kind of dig a little bit deeper, are there certain parts of the market, thematically speaking, that are catching your eye a little bit more these days as a portfolio manager for Baron Capital's funds?
Yeah. We feel like we need to have a diversified portfolio. Yes, AI is in everyone's tip of the tongue. And that's what's worked over the past few years. So much of the market has been left behind, especially companies, small and mid-cap companies left behind. We just launched that first SMID, small and mid-cap growth portfolio. Great valuations, especially they should be working as interest rates come down. But there's more to it. It's companies that are investing in themselves have been extremely penalized. Investors don't like to invest. They don't like to invest, penalize short-term earnings, have that hit as earnings come in, and that multiple also comes in. So it's a double whammy. We love that because we're able to find those companies, understand what they're able to achieve, invest in them at great valuations, and see that through to the life cycle. 2 companies come to mind that had been investing themselves are now realizing it. Guidewire is one of them. Guidewire has shifted everyone from on-prem software to the cloud. That's come to fruition. More companies are signing in, not only signing in, but taking on more modules. IDEX, same kind of thing. This is a company, Pet Diagnostic Systems. They develop more tests. Took them a little while to develop the test. They launched one this past year. We think they're going to launch another one next year. You're seeing more usage and earnings increasing and valuations increasing as well. But there's still a lot of companies in our portfolio that are investing in themselves and penalized. So right now it's a great time to be investing in those businesses and letting them come to fruition if you're a long-term equity investor.
Gotcha. And a follow-up to that, there are 5 ETFs being launched right now. Any aspirations for expanding that family of funds, and what exactly would you look at potentially to expand those offerings?
Sure. We have 5 as of today. I want to get these 5 right. That is our focus, is getting these 5 right before doing the next wave. I do anticipate us doing more. But let's get these right and then take it from there.
Ron, did you ever think in your life that you'd be sitting there, a storied Wall Street career, did you ever think you'd be at the top of the podium, ringing the bell, the opening bell at the New York Stock Exchange, and launching a listed product at the NYSE? Just what kind of a feeling was that for you, and in terms of just your perspective on how it's affected you as a person and your family overall?
Well, you said you're a Jersey boy.
I'm not a Jersey guy. I'm a California guy. But I married a Jersey girl, though. For
Okay,
sure.
and so you've been to Asbury Park,
I have.
and that's where I grew up. And so think about the boardwalk in Asbury Park and Convention Hall on the ocean, and that's my background. And then getting to be on the New York Stock Exchange, a listed company, it's sort of unbelievable. It's the way I think about it. Unbelievable. My life has been unbelievable.
What exactly do you think that next chapter will be for you?
For me, I don't see it as being a next chapter. I just keep the same thing. So I think that over the next 10 years, I expect our business to be much larger than it is right now. As I said before, I thought that we were going to make 5 times again. So we made $57 billion in profits to now, over 40 years. I think we're going to make $250 billion in profits in the next 10 years. So I'm excited about that on behalf of the employees at Barron Capital and on behalf of our investors. And, you know, and there's so many companies that are interesting right now that have been left behind with everyone focusing on technology. One of my good friends is the chairman and founder of MSCI. I love MSCI. I love Henry Fernandez. And he says that one of the characteristics that we have that's rare is that we're able to see what isn't yet present. And MSCI, so our cost in MSCI, we invested in it when he founded it. He escaped from Nicaragua when there was a coup, came to America penniless, started MSCI at Morgan Stanley, brought it public in 2008. He said we were responsible for allowing him to do that, for enabling him to do that. Came public at $10 or $12 a share, went to, or maybe 15, went to 30. The market crashed, went back to 15. We kept buying, and now it's 600. And I think the opportunity for MSCI, they're buying in their own shares, and he's been buying shares as well personally, which is, he says he's trying to keep up to us. I'm trying to keep up to him. MSCI. And there's another one, FactSet, that we've been an investor in for a long time. We weren't able to invest in Bloomberg. This is like Bloomberg. It was a way that we could invest. So we've been an investor in, 10 or 15 or 20 years, and we made multiples of our money. And the stock is down this year. And what I think is really interesting, do we have a couple more minutes?
Absolutely, please.
So there's been a change in management, and a young man who was brought up in India on a farm, impoverished, went to the top IT school in India, went to the top engineering school in India, was a consultant and got a job as a consultant for McKinsey and Company, then came in the financial crisis in New York when he was 33 years old. He was brought to New York with whatever kind of card you get, and he was advising Geithner and all the people to prevent the whole economy from crashing. He's 33 years old, from crashing. And then he gets recruited by Morgan Stanley, by J.P. Morgan rather, and he's one of the top, there's thousands of employees there, he's one of the top 10 people who's being considered to succeed Jamie Dimon. And he makes it into the top 10. And then he doesn't, he's not going to be the successor. He says, okay, I'm leaving. Where does he leave? He goes to FactSet, and where FactSet had a new search, and he's now the new CEO. And I've been telling Michael, I said, Michael, think about if you have a company that is this really cool company with great opportunities, like a Bloomberg, but I think young and up and coming, and you have a guy like this, a killer guy is 51 years old, or 52 years old, and think about you put Jamie Dimon at 51 or 52 years old in charge of this company. That's what just happened. So basically, you find companies like this, you find people like this who run these businesses, say, I have to invest with that person. So we came out of, the stock is in half this year. So basically, but because of, a number of different things that aren't continuing. And so we're very excited about that. But across the board, whether it's hotels, whether it's real estate, whether it's financial companies, whether it's consumer products companies, you can find them everywhere. And so that's what's really exciting to me right now, that we have this portfolio of very exciting, super fast-growing companies that are risky. Then you have 30 or 40% of our portfolio. Then you have 50 or 55% in these good, solid, double-digit growth companies. And then you have 10 or 15% in companies that are penalized in current earnings to become much larger in the future. And those are companies that last 10 or 15% where nobody wants to invest in those companies until it's obvious about what the company is going to produce. We invest in those companies for a portion of the portfolio, which is one of the reasons we performed so well for so long.
I could go on for hours, literally, Ron, with you and Michael here talking about investment philosophy and ideas. I wish we had more time, but please come back and see us again soon. We'd love to have you back, Ron, Michael.
Thank you for having us.
Thank you for your ETF Edge inclusion in your program. We appreciate it.
Thank you very much, Ron and Michael as well. Now, my thanks to both of them. We've asked both of them to stick around for the ETF Edge podcast. You can catch that and all of our other content over at etfedge.cnbc.com. Thank you very much for watching, and we'll see you next week.